Right now, as we watch the live ticker tape, Alibaba Group Holding Ltd. BABA is trading at precisely $160.56, surging upward by $7.57, or roughly 4.95% on the intraday chart, a move that is absolutely decimating the short sellers who bet against this resurgence. The market is currently open and active, and what we are witnessing is not just a standard volatility flush, but a high-volume institutional accumulation phase that is ripping through resistance levels that have held this stock down for the better part of 3 years. If you are sitting in front of your trading desk or glancing at your Fidelity mobile app during your lunch break, the first thing you likely notice is the sheer velocity of the green candles forming on the 15-minute time frame. This is not retail buying. This is the heavy hand of smart money finally capitulating to the undeniable math of deep value combined with a sudden, violent growth catalyst. The expectation going into this trading session was largely muted, with many analysts predicting a wait-and-see approach ahead of the fiscal Q2 2026 earnings print, anticipating that the lingering clouds of Chinese deflation and the relentless competition from PDD holdings would keep the stock range-bound between $150 and $155. There was a palpable sense of fatigue among the shareholder base, a feeling that no matter how cheap the stock got, the geopolitical overhang and the internal restructuring chaos would forever act as a gravity well, preventing any sustained escape velocity. The common belief, echoed in nearly every Fidelity Wealth Management newsletter and SoFi Invest blog post for the last 2 years, was that Alibaba was a show-me story, a broken giant that had lost its innovation edge to nimbler, hungrier rivals. However, the reality we are seeing play out on the screens today flatly contradicts that bearish consensus in a way that forces us to completely reevaluate the thesis. The reality is that the market is suddenly pricing in a massive structural pivot in Alibaba's business model, specifically the explosive success of its AI chatbot, Qwen, which has reportedly crossed 10 million downloads in its first week. This is the AWS moment that bulls have been praying for, the moment where the narrative shifts from struggling e-commerce legacy to leading AI infrastructure play. This divergence between the sleepy, fearful expectation and the aggressive tech-led reality is creating a classic liquidity vacuum where offer prices are being lifted indiscriminately. Investors who were content to sit on the sidelines or park their cash in Schwab Intelligent portfolios are now scrambling to gain exposure to what looks like the cheapest AI play in the global market. When you compare the price-to-earnings multiples of NVIDIA stock or Microsoft to where BABA sits today, even after this 5% pop, the disparity is so wide it creates an immense amount of tension that can only be resolved by a higher stock price. We are seeing a rotation, arguably one of the most significant capital rotations of late 2025, where profits are being trimmed from overcrowded U.S. tech trades and funneled directly into the highest quality Chinese tech names, with Alibaba leading the charge. If you zoom into the intraday price action, the morning session began with a gap up that many day traders on Interactive Brokers trading platforms initially tried to fade, assuming it was another pop and drop scenario that has plagued this stock since 2021. But notice the volume profile in the first hour of trading. Instead of drying up as price advanced, volume accelerated. This indicates that every dip was being aggressively bought up by algorithmic execution desks, likely on behalf of large macro hedge funds that have been underweight China for too long. The stock successfully backtested the $158 level around 10:30 a.m. EST and launched higher, never looking back. This type of price action, a gap up, a successful retest of support, and a continuation to new intraday highs is the hallmark of a trend day, where the closing price often ends near the high of the day. For those of you managing your own capital through Robinhood stock trading accounts, this is the kind of setup that requires you to suppress the urge to take quick profits and instead let the trend work in your favor, as the momentum signals on the daily and weekly charts are finally aligning in a bullish synchronization that we haven't seen since the pre-crackdown days. Let's talk about the specific catalyst driving this fervor, because it is critical to understand that this is not just a dead cat bounce. The news that Alibaba's proprietary large language model, QWen, has achieved such rapid adoption is a direct challenge to the supremacy of Western AI models. For years, the market assigned zero value to Alibaba's cloud and AI initiatives, treating them as money pits. Now suddenly the market is realizing that Alibaba possesses the unique advantage of having both the proprietary data from the world's largest e-commerce ecosystem and the cloud infrastructure to train these massive models. This is not unlike when Amazon Web Services first revealed its profitability. It changed the entire complexion of the stock. If QWen can become the dominant interface for business and consumer AI in China, the total addressable market for Alibaba expands exponentially. This effectively neutralizes the bear argument that e-commerce growth has peaked. Who cares if gross merchandise volume on Taobao grows at 5% if the Cloud Intelligence Group is growing at 30% with SaaS-like margins? This is the mental switch flipping in the minds of fund managers today.